Global inflation. Top trading strategies for 2025. Inflation has been the dominant economic theme of the last few years, and in 2025, it remains one of the most critical forces shaping global markets. Central banks from the U.S. Federal Reserve to the European Central Bank continue to battle rising prices with monetary policies that ripple across every asset class. For traders, understanding inflation's impact is no longer optional. It's a necessity. Why inflation matters for traders. Inflation erodes purchasing power, influences consumer behavior, and directly affects corporate earnings. But most importantly, it dictates central bank actions. Every speech, interest rate decision, or inflation report has the power to swing currencies, commodities, and equities in unpredictable ways. Strategy 1. Hedge with commodities. Commodities such as gold, silver, and oil tend to benefit during inflationary periods. Precious metals, in particular, act as a store of value when fiat currencies weaken. Traders can look at spot markets or ETFs to position themselves for inflation-driven rallies. Strategy 2. Currency plays. Inflation often creates winners and losers in the FX market. Currencies tied to resource-rich countries, like the Canadian dollar, CAD, or Australian dollar, AUD, can outperform when inflation boosts commodity demand. On the other hand, currencies from economies struggling with high inflation may weaken, creating short opportunities. Strategy 3. Bond and interest rate awareness. Rising inflation typically pushes bond yields higher, reducing the attractiveness of fixed-income assets. Traders should watch yield curve movements closely. Shorting bonds or trading interest rate futures can be effective hedges. Strategy 4. Equities rotation. Not all stocks suffer equally. Defensive sectors like utilities and consumer staples often hold steady, while growth-heavy tech can stumble under high rates. Traders can rotate into inflation-resilient sectors to protect their capital. Strategy 5. Stay flexible with inflation. Data above all, inflation trades require flexibility. Consumer Price Index (CPI) releases, wage reports, and central bank commentary can quickly flip market sentiment. Setting smart alerts and reacting in real time is essential. Final takeaway. In 2025, global inflation remains a double-edged sword, a risk for the unprepared but a goldmine for the strategic. By combining commodities, FX plays, sector rotation, and real-time data monitoring, traders can turn inflation from an enemy into an ally.